How often do you find yourself reaching for your phone or wallet to make a payment? Quite often, right? It's a daily dance we all partake in, whether it's buying a coffee, purchasing a new gadget, or even settling a debt. The payment industry, an intricate ballet of transactions, plays a vital role in our lives. It's an ever-evolving symphony, with each new movement bringing more convenience and speed to our fingertips. Now let's take a step back in time to see where it all began. Imagine a world where you trade a bag of grain for a shiny new spear. Now that's a picture, isn't it? This was the scene thousands of years ago when bartering was the order of the day. You see, bartering was the earliest form of payment, and quite frankly, it was as simple as it sounds. You had something I wanted, I had something you wanted. We swapped. Simple, right? Well, not quite. Picture this. You're a fisherman with a boatload of fish, but you need a new net. The net maker, however, doesn't need fish. He needs wood to make more nets. Now you're stuck playing a game of trading tag just to get what you need. It's like a never-ending game of musical chairs, only with goods and services. As societies grew, so did the need for something more tangible and universally accepted. The barter system had its charm, but it was time for a change. And what a change it was. Enter coins and paper money, the new superheroes of commerce. As economies grew and societies became more complex, the need for a standardized medium of exchange became evident. The solution? Coins. Their uniformity, easy portability, and inherent value made them an instant hit across cultures. But as the world spun faster, paper money stepped in, lightening pockets and revolutionizing trade. This wasn't just a matter of convenience. Coins and paper money brought a level of stability and trust to transactions that were previously unheard of. They became the universal language of commerce, breaking down trade barriers and fueling economic growth in unprecedented ways. From the ancient Chinese jiaozi to the greenback we know today, paper currency has had quite the journey. But as trade expanded, carrying loads of money became quite a hassle. There had to be a better way. So, we invented banks and checks to make money move without moving money. Clever, isn't it? This era of financial evolution saw the birth of banking systems that became the arteries of commerce, pumping money from one place to another, creating a fluidity in transactions that had not been seen before. Checks became the blood cells in these arteries, the physical manifestation of a promise to pay. Just imagine the change it brought about. No need to lug around heavy coins or risk losing them. You could now write a check and the recipient could cash it in at their convenience. It's like sending an IOU with your bank guaranteeing the payment. This development was a game changer. It made transactions safer, faster, and more efficient. It streamlined commerce and opened up new avenues for business growth. But we didn't stop there. The convenience of transactions was about to take a giant leap. In came electronic payments, turning physical cash into numbers on a screen. A revolutionary force, the advent of credit cards in the mid-20th century forever changed the game. Suddenly, bulky wallets thinned out, and a simple swipe at the counter was all it took to make a purchase. But the convenience didn't stop there. Enter automated teller machines, or ATMs as we fondly call them. No longer were we bound by bank hours. These 24/7 money vending machines brought banking to our fingertips, quite literally. These technologies not only reshaped our habits but also the entire retail industry. The ease and speed of electronic payments opened up a world of possibilities. Shopping sprees became less about counting bills and more about punching in a PIN, so what could possibly top this convenience? Well, as it turns out, a whole lot. And then, the internet happened. The internet turned the world into a global village, and money was no exception. As the digital age dawned, banking took a leap into the online world. No longer were we bound by the shackles of banking hours or lengthy queues. With a few clicks we could check balances, transfer funds, and pay bills right from the comfort of our homes. But the internet didn't stop at reshaping banking, it revolutionized commerce too. E-commerce platforms sprouted, offering a myriad of products at our fingertips, and online transactions became the norm. Yet, the digital revolution had more up its sleeve. Enter digital wallets, a concept that transformed our smartphones into portable banks. These handy apps stored our financial information securely, facilitating swift, hassle-free transactions. From buying a cup of coffee to booking a movie ticket, digital wallets made it all a breeze. Soon, our phones turned into wallets. Suddenly, paying for things became as easy as tapping your phone. Mobile payments burst onto the scene, transforming our smartphones into wallets. This evolution was spearheaded by companies that saw an opportunity to streamline the way we transact. They introduced apps that enabled us to pay with a simple tap or scan of our phones. This was made possible by NFC technology, short for near-field communication. This tech allows two devices to communicate when they're close together, and it's the secret sauce behind contactless payments. With NFC, you simply wave your phone near the payment terminal and voila, transaction complete. And it's not just about convenience. Contactless payments are also faster and can even be more secure, reducing the risk of skimming or other forms of fraud. So, next time you're at the checkout, why not give your cards a break and tap instead? Meanwhile, a new form of payment was quietly brewing. In the shadows of the digital world, a new form of money was born: cryptocurrency. Like a digital phoenix rising from the ashes of traditional finance, it heralded a new era of decentralized transactions. Cryptocurrencies, with Bitcoin leading the charge, are essentially digital or virtual currencies that use cryptography for security. Unlike conventional currencies regulated by governments or central banks, cryptocurrencies operate on a technology called blockchain. Picture blockchain as a digital ledger, transparent and immutable. Each transaction forms a block that's added to this chain, visible to everyone within the network, but impossible to alter or delete. This makes cryptocurrencies secure, transparent, and resistant to fraud. The impact of cryptocurrencies and blockchain on the payment landscape has been nothing short of revolutionary. They offer the promise of lower transaction fees compared to traditional online payment systems, and provide an alternative transaction method for populations without access to traditional banking systems. Moreover, cryptocurrencies have opened up new avenues for investment. The Bitcoin boom, for instance, turned many early adopters into overnight millionaires. But it's not just about Bitcoin. There are thousands of other cryptocurrencies, each with its own unique proposition, further diversifying the digital payment ecosystem. However, like any frontier, the world of cryptocurrencies is fraught with challenges and risks. It's a volatile landscape where fortunes can be made or lost in the blink of an eye. But the journey wasn't all sunshine and rainbows. With great technology comes great responsibility and a few headaches. As the payment industry evolved, it found itself in an ongoing battle against security concerns and fraud. These challenges are not to be taken lightly. They're like the party crashers of this grand soiree of technological advancement, always looking for a chance to slip in unnoticed. But fear not, for the industry is not unarmed in this battle. It has equipped itself with a robust arsenal of security measures. From multi-factor authentication, throwing in an extra layer of "are you really you?" to encryption, turning sensitive information into indecipherable codes. And let's not forget biometrics, because nothing says "it's really me" like your own fingerprint or face. Moreover, artificial intelligence and machine learning are increasingly being used to detect and prevent fraudulent activities, making our financial transactions safer than ever. As we look to the future, the payment industry continues to evolve, and with it the measures to keep it secure. So, what does the future hold for payments? Well, let's take a peek. One of the most talked about trends is decentralized finance, or DeFi for short. This innovative concept aims to use blockchain technology to cut out the middleman in financial transactions. Imagine sending money directly to a friend halfway across the world without needing a bank or a remittance service. Now that's the power of DeFi. And then we have digital currencies by central banks. These are not to be confused with cryptocurrencies. Central bank digital currencies, or CBDCs, are the digital form of a country's official currency, controlled and regulated by the central bank. They promise to bring the benefits of digital payments without the volatility of cryptocurrencies. Lastly, we can't forget about the Internet of Things. Imagine your smart fridge reordering groceries when you run low, and paying for them automatically. That's just one possible scenario. The future of payments is as exciting as it is unpredictable. From barter to Bitcoin, the journey of payments has been quite a ride. We've traced the footsteps of currency, from the earliest forms of trade to the dawn of coins and paper money. We've seen how banks and checks made money move, and how electronic payments simplified transactions. The digital revolution brought us online banking and mobile payments, while cryptocurrencies introduced a new dimension to the landscape. Amidst challenges, the industry continues to evolve. What do you think is next for the payment industry? We'd love to hear your thoughts. That's all for today's journey through the evolution of payments. If you found this exploration as interesting as a gold coin in a chest of barter goods, show some love by hitting that like button. Become a part of our Tech Bytes Tornado Channel family by clicking on the subscribe button. Sharing is caring, so why not share this video with your friends? And if you have a burning thought or a question that needs answering, don't hesitate to drop it in the comments. Don't forget to drop your thoughts or questions in the comments below. Until next time, keep exploring.